Hey everyone, it's Alex Kahaya from the Index Podcast. I want to tell you about Mantis, a groundbreaking platform that's simplifying the way we interact across blockchains. If you're a developer or just into DeFi, you'll want to pay attention. Mantis enables trust-minimized transactions across different chains, letting you trade or execute actions seamlessly while getting the best possible outcome, all without the usual complexities. Imagine being able to move assets and settle transactions across blockchains easily with maximum value extraction, all while staying secure and decentralized. That is what Mantis is bringing to the table. Mantis is an official sponsor of the Index Podcast, and their founder Omar and I regularly host a new live stream series on X called Everything SVM. We have these live streams weekly, and if you want to keep up with what's happening in the Solana ecosystem, especially as it relates to the new innovative deployments of the Solana virtual machine, you should tune into this live stream. Check them out at mantis.app and follow them on X at Mantis, MANTIS. At the Index, we believe that people are worth knowing, and we thank Mantis for enabling us to tell the stories of the people who are building the future of the internet. We'll see you on the other side. Hey everybody, and welcome to the Index. I'm your host, Alex Kahaya, and today I'm excited to welcome Tristan Frizza, founder of Zeta Markets, which is a decentralized exchange, otherwise known as a DEX, on the Solana blockchain, offering fast and secure perpetual futures trading. Thanks for coming on the show.
Thanks for having me on, Alex. Excited to be here.
So yeah, lots of really cool, exciting things going on with Zeta Markets. You've been around for a really long time, but before we get into like the weeds on Zeta Markets, can you just talk about who you are and how you got into this space? Like, why are you here building in crypto in the first place?
Yeah, good question. I'll try and give you the kind of long and the short, but I started probably in crypto in 2017, more just getting in on the trading side and playing around with the technology and seeing what it was all about. That was like one of the big kind of waves of adoption, I guess, for crypto. Got given my first crypto by one of my friends, and that was when I was like learning to code and kind of understanding what was happening. Unfortunately, like made a bit of money, lost it all when the market crashed, and I think that kind of burned me a bit from crypto at that time. But it gave me that passion and that flair for understanding what was actually going on. You know, I was taking a degree in computer science, and I took a bunch of majors around distributed systems because I was like, hey, I was just using all these kind of blockchain technologies. I didn't really understand how they worked, but now I actually want to dig in and kind of see what's happening under the hood. So I learned about proof of work, built my own kind of little proof of work concept, you know, learned about a lot about like Ethereum and its kind of proof of stake mechanisms. And that got me really interested. And so when I kind of came back after graduating and working for a couple of years, more on the kind of AI side is what I did for like a number of years. I wanted to do a startup, and crypto seemed really exciting in that, you know, I read the Uniswap contract and I was like, wow, this thing literally trades billions of dollars a day with 70 lines of Solidity code. That's just like insanity to me. It's crazy. So I thought that was really cool. And then just wanted to kind of get back in, seeing what had happened to DeFi in the kind of 2 years that I was away. This whole DeFi smart contract thing had just blossomed and I'd completely missed out on it. So I basically just started learning Solidity while I was bored over Christmas and not spending time with my family. I was just kind of coding, which is kind of sad. And then, and then very quickly just kind of came across Solana, you know, got introduced to Anatoly in the very early days, started chatting to him, and I was just blown away with the amount of expertise and the brains that guy has. And I was like, this is a very cool space and I want to be involved. And basically signed up for a hackathon, won it, I think the second ever Solana hackathon, and then just been building ever since.
And tell me more about the hackathon. Like, did you come into it with the idea for Zeta Markets, or did you develop that as you went along? Like, did you have co-founders, you know, when you started, or how did that take shape? What did it look like for you?
Yeah, good questions. This is a bit of a throwback. So we were kind of, while we were kind of working, I was working as a data scientist in kind of big tech. So I was doing my main job, and then nights we would basically just go hang out in a WeWork down the road, me and a couple of my kind of university friends who were more working in the kind of HFT side. And we were just we were all crypto curious, and we were talking about, you know, different trading strategies and things that we could build. And then we got the idea of, well, at least me personally, I'm not the world's best trader. I'm more of an engineer and a builder. And so I thought, like, can we actually build a platform and do something cool there? That's maybe more my skill set and my strength. And so we thought, what hasn't been done yet? Well, we wanted to do lending first, realized that that's kind of already been done with Aave and Compound and a bunch of other stuff out there. And then we came across derivatives, which we thought was really interesting. And we're like, hey, a lot of this like perps options stuff still feels pretty nascent. People haven't figured out how to offer leverage on chain. Is there something that we can do there? And so we were looking through some of the designs. We actually started off as an options platform. That was our kind of early idea, and that's what we ended up enrolling into the hackathon, was like a full-blown options platform, which is like the most complicated end of the spectrum you could possibly go. But yeah, we kind of made something, put it on DevNet. It barely worked. Like all the, we were like one of the first Pyth customers. I think we just had to like crank all the stuff on chain in terms of the pricing ourselves. We didn't really understand how the RPCs worked, so we were getting hit by all the kind of rate limits because we didn't pay for like a private node. So we just had to do some hacks where we just got everyone to hotspot their phones on different IPs and then all kind of like send and route user transactions through that. So it was like an incredibly like hacked together backend that we got ready in 2 or 3 weeks. And I just basically worked with my co-founders, slept on one of their couches. Essentially, we were just all in their apartment for 3 weeks, just took break from our job and just basically worked like 12 plus hours a day and got this thing out, by some miracle, got a full exchange out. It was pretty unusable, but it worked enough for it to kind of demo. And then we basically just pitched on Twitter, just showed it around. A bunch of like VCs and other people in the ecosystem were like, wow, this is pretty cool. You guys built a whole thing in like 3 weeks. That's pretty nuts, like end to end. And then we got a bunch of votes because people were kind of hyped. And then, yeah, that was great. Like you just kind of build a reputation from there. Coming in to crypto, I guess, without that background and without that kind of network was really nice. People were like, okay, your work speaks for itself. And then we just basically took that, rewrote the entire thing, scrapped it, rebuilt it from scratch. And that's kind of built the foundation of the platform that we have today.
Well, there's one thing, I think one lesson there for anybody listening who's thinking about maybe getting into the space. The Solana culture is to ship.
Yep.
And that's how you get respect. Like, you don't get respect for like asking for money or trying to sell people stuff. You get respect for shipping product that's good product, or innovative ideas, like doing, especially things like the harder, the better. And that's the thing I love about it. I mean, one of the other things that I think is really cool that I really liked about Raj and Toli when I met them is like, they balance that like hardcore, ship it mentality with great business acumen, good execution on the business strategy side of things. And I think that carries over to it's kind of been amazing. One of the things I've been thinking about a lot lately is it's been amazing how that the culture they seeded really spread across the entire ecosystem as it grew. And it attracted a lot of like-minded entrepreneurs, which is, I think, incredible to see.
Yeah, I agree.
And you're like a direct reflection of that story and the attitude. That's why there was so much hype, is because you guys were shipping. So what's happened since then?
A lot has happened since then. So we've been building for almost 3 years, or probably actually more than 3 years on Solana now, which is pretty cool to say. It makes me feel like a bit of a boomer on Solana. But we've been around for a long time, which is nice, and we've got quite a lot of experience building stuff. So Zeta to date, we kind of pivoted to perps somewhere along that journey around the time that FTX collapsed. We just realized like liquidity on chain is going to dry up big time, and options are just like a very expensive and difficult endeavor to kind of procure liquidity for. So we went down the perps route, and that was actually a really good pivot because I think just trying to find product market fit with that has just been so much easier. It's just like a much simpler product, and more I'm just kind of realizing that the DeFi audience, people are looking for simple things that work. They're not looking for like, throw the kitchen sink at it, make some really complicated financial product. I think maybe we'll see that in 5 years, but I think we're just so early now that you don't need to over-engineer the problems. So perps have been great. It's made our life easier. It's something that people have loved. And doing that in like a fully on-chain way, something that is basically unique about our exchange is we do everything on-chain at the moment. So everything runs, the order books, the margin system, the liquidations, everything is permissionless and on-chain. You self-custody your own funds. The order book matching logic is not running on some centralized server. This thing is running on a smart contract that is, basically replicated across 1,000 validators around the world on Solana, and they're all kind of running the same stuff. So it's pretty cool. And that was something that had never been done before. So we kind of built this out, trying to see if it was possible. Essentially, a lot of people were just like, you can never do an order book on chain. This thing's impossible. You can never build a fully on chain exchange. But we built it. It works. It's done probably on the order of millions or tens of millions of trades on it. It's done like 10 or 12 billion dollars worth of volume at the moment, which is pretty nice.
That's crazy.
Like a fully on-chain exchange. And yeah, like over the last kind of 6 months, we grew it up to kind of over 100,000 users, which is really nice. So with this Solana big wave of adoption coming, I guess post breakpoint last year, it was really cool to see a lot of people just jumping into the Solana ecosystem, and they're like, wow, transactions are so fast, things are so cheap. You know, the product experiences that people have built is just kind of like, you know, like miles better than what we've seen on Ethereum or some of these other chains. And so I think that was a real eye-opener as to what's possible. And now there's a bunch more capital and TVL on the chain. People are willing to trade. DeFi is kind of popping. And yeah, we're kind of in that position now where we have a product that's pretty mature. It's got a bunch of adoption and usage, and we're just kind of try and go and scale that more, add more markets, rejig some of our infrastructure, which kind of dovetails into this kind of L2 thing that we can chat about, and that's basically where we are at this stage.
Before we get to that, can you talk about like what perps are for people who might not be traders?
Yeah,
like personally, sure. I don't trade anything. I literally only own like one asset. You can probably guess what it is, and I just hold it.
Diamond
and ever since I've been in crypto, that's been my entire strategy: is like buy and hold. But I know there are other people who make a lot of money trading. So anyway, explain perps, and we can kind of go from there.
Sounds good. So everyone's probably familiar with spot trading. So if you own Bitcoin, you own Solana, you're kind of owning what's called the spot asset. And so there are very popular ways to trade that, namely AMMs such as Uniswap, Radium, for example. And now we see with spot aggregators like Jupiter, they can kind of route all these orders and get you the best prices, but you're trading the underlying crypto asset, which is great. Derivatives are a little bit different. So you're not actually trading the asset itself. You're basically trading some kind of derivative of that. So we can kind of, for example, with a perp, which is basically like a futures product, if you're familiar with that in traditional finance, perp is basically a future, but it never expires. Futures basically say at some point in the future, this thing will settle at a certain kind of strike price, and then you have the obligation to go and buy that. People use it in traditional markets to do stuff like hedging. If you're a farmer or something or other and you want to lock in the price of your crop later in the year, you can kind of buy futures and kind of manage the price to avoid price spikes or kind of changes down the line. So why do people care about it in crypto? So you have these perpetual futures, which are really nice, and they kind of roll indefinitely. They don't expire at like, you know, the end of the month. You have to rebuy the futures and you have them kind of physically settled. This thing just basically rolls in perpetuity. And to me, in my mind, it almost feels like a synthetic spot, essentially. You can basically get a long position or a short position, which is really cool, on an asset like Solana. So this is something that's not possible with traditional spot. If I want to go short Solana, you have to do it in kind of a complicated way. You would have to go to a lending market. You would essentially have to go and borrow it. If the price goes down, then you can kind of repay it for less, and you would kind of profit off the short. So that's kind of like a long-winded and complicated way for people who are a bit more sophisticated. And it's kind of how margin trading works. But with perps, is already kind of like baked into the product. You can take a long position or a short position. So you can kind of go both directions, which is nice. So people can kind of express long and short. And probably the biggest advantage of this kind of synthetic perp product is you get leverage. That's something you don't get in spot markets. If I buy one Solana worth, I put $100 in, Solana's $100, I get one Solana back, and that's pretty much all I have. The cool thing with perps is you can actually take on more exposure than the capital you have. So that's called being under collateralized. I can put up only maybe $5 or $10 on Zeta, and I can get exposure to one whole Solana worth. The thing is, I guess the caveat is, so yes, you only need a small amount of capital. It's very capital efficient, right? So I can take on big positions with a small amount of capital. The only risk you run is this kind of liquidation risk, which you wouldn't have in the spot markets. It means that if the price does move, this big leveraged, 20x position that you might have comes very close to liquidation very quickly. The price only has to move, say, a couple of percent or a fraction of a percent, and it kind of wipes out your position. So you can think of it as a bit more of a kind of risk-adjusted way to take positions in the market. and it's a way to kind of go long and short and express different opinions. So I think that's why it's actually become kind of, I would say, the de facto trading product in crypto markets. If you look at centralized exchanges like Binance, a lot of the liquidity, a lot of the volume for majors is coming through the perps market. You can just get a lot more leverage. People can take on bigger positions. You can basically make your money work for you a lot more. And then you get to express, both directions in the market in this very kind of versatile product. So that's why we love it.
Because, it's interesting because like this is why crypto, we have so much volatility in crypto too. Is the markets move in one direction or the other, and you get squeezed on one end or the other, and then you get volatility. And that's what we saw actually like the last couple of weeks. And the interesting thing for Zeta Markets, first, I have a question like how you guys make money. But the interesting thing about it, regardless of how you make money, you basically make money in volatile markets, right? Like you'll make more money in a volatile market because there's more stuff happening probably in the perps market when it's volatile. From a business standpoint, that's great. So how do you guys actually make money? And then I think like we can start talking about the L2 stuff next because it ties into really well to that volume piece, that activity. But yeah, how do you make money?
Yeah, very simply, similar to many other exchange models, it's through like trading fees. So we take a relatively small cut, like 10 basis points or lower if you're on certain fee tiers, which you get through trading more volume. Eventually, we're probably going to add this for like token utility as well. Staking tokens, we're going to give discounts to people. But essentially, every time you make a trade, we take some like very small percentage of that 10 basis points. That's if you're a taker, which means you've kind of crossed the order book. If you're a maker, we have pretty low fees. It's like 2 basis points last I remember. And if you're a professional market maker, we just set it to 0 because we're trying to get as much liquidity on our exchange. So we kind of take that, and yeah, it is a volume game. The more volume you can get, if you can get $1 billion through there and you take, even like a small fraction of that, that's kind of like a nice bottom line revenue for the business. So we're always trying to drive more volume, get more people trading, list more markets and do stuff like that. That's like pretty typical. And yeah, like you said, the nice thing about being an exchange, I guess, is you don't need to take an opinion on the market. Whether people want to go long, whether people want to go short, wherever the market moves, there's always trading activity. There's always something to be done, which is great. Whereas I feel like with, I don't know, maybe an asset like NFTs or something or other, everyone's very happy when the thing goes to the moon. But obviously when prices are down, I think it's very hard to express those opinions.
Right. And then volumes go down. Yeah, exactly. I think that's a really brilliant point. Actually, like, the NFT market doesn't have these primitives really for this kind of thing. And a lot of it has to do because it's non-fungible, right? I mean, technically you could do it with a whole NFT, I guess, but you'd have to own, I don't know, for it to make any sense, you'd have to own like a lot of the NFTs in that, in that collection or something.
I mean, even with stuff like meme coins, since it's all like spot markets, you have a lot of buyers and, people love their pump.funds when the thing goes up 1000x. But the problem, I guess, that's been in the market is there's no product like perps that people can use to kind of short these markets or kind of balance it out. So it tends to be very like skewed long on some of these products until obviously they get rugged or crash or something like that. I think MarginFi and SolLend put out some new kind of lending oriented products that let you short stuff, which is pretty cool. But yeah, I think we need to move in that direction to have more price efficiency and not have a bunch of these kind of like meme coins that are pumped up price like past infinity. You want people to actually, be able to find the right price level for these things. And that's what some of these derivatives and other products afford you.
Yeah, makes total sense. So, all right, walk me through the L2 that you guys are building, and like also just break down what it actually that means for people, because I think like what you guys are calling an L2 is actually different from like a lot of other teams that are building like SVM based L2s are. So can you just talk about that a little bit?
Yep, sounds good. So maybe I will jump in first and clarify why do we need an L2? Because I think this is a controversial topic and a lot of people are like, Solana is all about monolithic scaling, and we've been told for years that Solana is good enough, it scales with hardware. This is kind of like the end state for this kind of monolithic roadmap. And I largely agree, but I've been like very kind of vertically scaling pilled for like the longest time. And I still believe in it a lot. I think it works super well. You see super apps like Jupiter just absolutely crushing it. And the benefits they get is they can compose with all these AMMs, atomically all in the same piece of global state. Like it's just pretty incredible how Solana works, and it's always just been mind blowing for me. Same with our current exchange. It's just like really nice. We probably do like 5% of the block space on Solana currently with our current exchange. Like it's pretty massive. And that's been really great to just like run an exchange that puts through this much volume. I mean, it's getting a bit expensive on the gas costs these days, but yeah, these are all kind of motivations why we're considering this kind of L2 architecture. So one has just been like increasing gas costs and contention on the L1. So we have to put through like literally millions of orders through on our exchange. And when you're competing with Pump.fun, when you're competing with all proof of work mining, all this kind of stuff, it does, even though we have the local gas fee markets, like the gas fees definitely are increasing for us. Likewise, there is a bit of like, there were congestion issues, I guess, the last couple of months. Those have largely been resolved with the stake-weighted quality of service and a bunch of other kind of improvements on the validator layer, which is really cool to see. And we don't have those problems anymore. But yeah, that was like a big motivation why we started thinking about it a couple of months ago was, people were just coming into trade and they're like, my stop loss isn't firing. I can't get out of my position just because every transaction on Solana a couple of months ago is just getting dropped. And we're like, this is very hard for us to run an order book with, millions of dollars on it when people just aren't able to like exit positions. So that was like one argument on the congestion side. And then there's probably a larger argument just on the,
Can you lean into that before you go on? Like lean into that a little bit, because I want people to understand, like from a founder and a builder's perspective, the pain that you experience, like and how serious that is for your business.
Yeah, definitely. So you're running an exchange. There's a lot of risk in the system. We're not a spot exchange where we're like an AMM and everything's fully collateralized. And, if the price goes down or something or other, people just kind of like trade out at a lower price. That's kind of not a problem for Jupiter or any of these other players. But for us, I guess, as a perps exchange, you do run this real like risk of the exchange, like potentially having a drawdown. And so this might happen in that, say, Solana or some other market, for example, this happened to some other kind of exchanges on Solana when Luna crashed, the thing goes down 90%. So now your kind of reference price for this asset has gone down massively. You're not able to liquidate those highly leveraged positions. Suddenly the position that someone had on that they thought, or that was marked to market when Luna was $200, they thought it was like $1 million position. Now Luna's gone down 99%. This thing is worth nothing. Who's taking on the bad debt, essentially? It's not the user, it's the exchange that kind of has provided or extended this kind of credit in terms of leverage. And so you kind of take on bad debt as an exchange if you can't liquidate properly. And you go into this state called over bankruptcy, where you basically, as the protocol, have to cover. We've never had to go into this, which is really good, but it's definitely something that we kind of engineer our risk systems around to try and do soft liquidations in time, to kind of manage things before they kind of blow up. We also have an insurance fund, so we can pay stuff out. So we've never had to exercise any of these things, which is good, but it's always a worry if some whale comes in there, like we've had, in like previous years where they just have like a $10 million position and suddenly Sol just moves like 20% overnight, which is not unheard of. These guys can get completely wiped out, and someone's got to step in there and they got to front, 10 or $20 million to take down these big positions. That's like no small feat. And if that kind of doesn't happen, then you can kind of take on a bit of contagion on the exchange. So that's been a big thing for us. And we're like, hey, if there's congestion, I can't actually like put through the liquidation transaction. I can't trade out of it. I can't do anything. You're just kind of sitting there on your hands, and it's a little bit tough.
In a normal scenario where you've got time, and there's like one whale who got wiped out, there's a way, like I'm sure you guys have some way in the UI for like another person to come in and say, I've got $20 million and that position's on a huge discount, right? Like they're going to buy that position pennies on the dollar, and they can do it. The problem with congestion in this scenario is all the markets are crash, and there's tons of congestion, and you can't liquidate properly, and no one can come in and even be the person to step into if they want to. And so you're like trying to, and then it becomes like out of control. So
there's a huge financial incentive. There's a huge financial incentive to do these things, and that's why people run all these MEV bots, and liquidations are massively profitable. So it's not like we don't have tens of people kind of lining up for a bunch of these things like we do. They're very kind of snappy auctions, but yeah, it's really hard, and there's a kind of self-reinforcing effect when markets nuke. More people are trying to trade to get in and out of positions or do liquidations, which causes more congestion, which kind of like feeds back into this vicious cycle. So you'll see when the price moves a lot, it just kind of like craters a bunch of different protocols like for like a certain number of minutes, and just kind of makes life a bit hard.
So before we like kind of drilled into that point, you were about to say something that was like, you said, this is actually maybe even a bigger reason, and you were going to go into something else. Like what was, if you remember, what was that?
Yeah, that's basically just performance and scalability. So I think Solana works like really damn well. I love like how Anatolia's engineered it from the start. Like I was talking to him and he really hasn't changed his architecture very much over the last 3 years. Like his initial design just really executed quite well. And now you're seeing people on Ethereum Twitter, I think even being like, hey, we need to scale, I think the bankless guys are like, we need to scale the L1 on Ethereum now.
Yeah.
We're putting too much into the L2 roadmap. So it's really easy, just interesting to see the flip in sentiment there. But yeah, so what we're trying to do is a bit different. So Solana, great general purpose chain. It can do spot, you can do NFTs, you can do lending, all this kind of stuff that's all composable together. We're trying to do something that's, I guess, very specific and maybe doesn't cater to, I guess, that kind of generalized SVM stuff. So with the Solana virtual machine, I guess on mainnet, you have 400 millisecond block times, you have certain restrictions in terms of like the stack height that you can use, in terms of the compute limit, in terms of how the gas markets actually function on Solana. These are all great, and like they've engineered them pretty well to suit a lot of applications. But if we're trying to build something that's basically a centralized exchange competitor, these guys have like 5 millisecond latency to place orders. They have gas-free quoting. They have just like all these performance benefits that I physically cannot engineer on our smart contract because I guess like cannot change the parameters of Solana. And so we figured it kind of makes sense to start owning a bit more of the infrastructure layer. We want to build it on top of Solana because that's where we think a lot of the liquidity and users and mindshare will accrue. So that's kind of what prompted us to be, hey, can we build something that is a bit more application specific as a layer 2 on Solana? And that's essentially what we're building. It's not a SVM L2, which I think, to clarify the difference, SVM L2 is like, let's take the Solana virtual machine and let's deploy it on an Ethereum rollup, for example. We're not doing that. We're building a rollup specifically on Solana. So like ETH rollups like Arbitrum might settle down, or Optimism might settle down and use data availability from Ethereum L1. We're doing this for Solana essentially. So our thing will take the computation and execution bit off-chain. So we run this order book off-chain. Everything runs in this ZK VM, which is not quite the SVM, although we can maybe support the SVM in future. Our order book runs in this VM. It's all written in Rust, so not too dissimilar there. And then we can kind of take all those proofs and that data, and we can post it back on Solana. And anyone can go and verify those blobs. So that's nice. You can kind of bridge from Solana to our rollup in a relatively short amount of time. You can use everything there. It's all kind of secured and validated, I guess, on a public blockchain. But we take that execution bit out of the SVM and then can actually run that in a much faster environment, and we can get the throughput essentially of a centralized exchange there. So for me, that's kind of the best of both worlds. Performance of a centralized exchange, security, and using the L1 validator set of Solana.
Is it still, do you have like a sequencer or something? Is it a centralized sequencer? How does that walk me through the architecture a little bit deeper on that?
Yeah, that's right. It will be centralized sequencer. For now, I mean, we're exploring some of those decentralized options, but I guess the technology is still pretty nascent, which is cool. But yeah, it will be a centralized sequencer. That kind of is what gives us these. We can get these essentially pre-confirmations. You might have seen this on Twitter. People talk about soft confirmations or sequencer pre-confirmations. So people can talk directly to the sequencer, and they can get these very like lightning millisecond fast essentially updates from the order book. So they would send an order. Within 5 milliseconds, we can basically broadcast this out and say this order has happened. It hasn't been confirmed yet on all the kind of full nodes of our rollup yet, because it has to get posted first down to the DA layer, and then kind of, the consensus happens on the Solana layer, and then people can kind of read it back up into the rollup nodes. There's kind of a latency of a couple of seconds there. But if people want the pre-confirmations, you have a pretty high chance that things are not going to get rolled back, or if you trust this kind of sequencer that it's not going to commit fraud or do crazy stuff, then those are a pretty good estimate. And that's going to let our front end get an extremely snappy order book with updates that feel like a centralized exchange. So yeah, we're going to run it basically in optimistic mode to start. So if you're familiar with Optimism, Arbitrum, it's kind of how it runs. You just send a bunch of transactions, they get sequenced, and you kind of assume things are good unless someone challenges them with a fraud proof. The benefits of that, cheaper to run, a lot more simple in terms of the architecture. Downsides are the bridging aspect of it. You kind of have to wait this challenge period of, in Optimism's case, 7 days. In ours, I think we can get it a bit faster because Solana block times are a bit faster. So maybe we're thinking like a day or two. And then we have the option to go down the ZK route as well, which we've been exploring. So if we can kind of do a ZK rollup, you can actually prove a bunch of these things, kind of prove every block. And then once you have those proofs, you pretty much know what's happened with certainty. And so the bridging time we can probably get down to 15 minutes or half an hour or something like that, which I think will be really nice for the users.
And that's just withdrawing your funds off the app chain, basically.
Yes.
You have a delay before you can do that.
That's right. That's right.
Just in case it gets rolled back. So you have the sequencer, which is centralized. There's sort of a gate there. It's acting. Does the sequencer also bridge assets back and forth? Like, how are you doing bridging?
Bridging, we'll kind of, we're literally just like getting this out now. We're just going to start with a simple implementation, which will just be kind of a listener. So talking with the Helios guys to just basically like, index the transactions and probably do it in a bit more of a permissioned way for now, just to kind of credit them up to the L2. We're just doing this for the purpose of a testnet. But the ideal end state is you use what's called a light client. These things are not running a full nodes. They don't need to download all the blockchain data. They just download the headers, which include a bunch of proofs. So anyone running like wallets or bridges and stuff like that can just run this light client, and they can get basically like a trustless way to do bridging. And so, yeah, we haven't set those up yet. We're kind of working on it. That's like a TBD, but that would be the way to do kind of like a trust minimized bridge.
Okay. And on the rollup itself, it sounds like there are multiple nodes there, like doing work. What are they doing, and how many are you going to have? Like, is it permissionless? Can like any validator come and run a node that does that service?
Yeah, correct. So yeah, I guess there are two main things to call out. So like one is the sequencer. The sequencer, all it's doing is, I guess, just ordering things. It's pretty simplistic in that. So people would send their transactions to the sequencer, it orders them, and then it basically sends it down to the proposer, which puts them on the L1. The sequencer, yeah, like we're going to start with kind of a preferred sequencer, I guess, which will probably be run by us. But anyone can spin up and register, alternative sequences. And that's kind of the beautiful thing with sequences. Yes, there is like a censorship argument there that people could do that. But the nice thing is we've worked with teams, or this is kind of like a thing that people have figured out is you can always register more sequences. You can go around it. You can also talk directly to the L1. So if the sequencer is suddenly censoring you, there's actually an escape hatch you can essentially do where it's like, I want my withdrawal off the rollup. You can send it to Solana and we'll be able to include that essentially in a permissionless way. And you can kind of circumvent the rollup. Obviously, you don't get the benefits of speed and all the things that you would want from the rollup, but there's always a way to kind of circumvent any kind of malicious sequencer. So that's kind of the sequencer. All it does is ordering. It's kind of fairly limited ways for it to kind of do fraudulent stuff. And then there's the full nodes, which is essentially like, I guess you can think of similar to validators on Solana. These kind of will go and run a bunch of the computation on the rollup. So what they do is once the block has been proposed, so sent from the sequencer, posted down onto Solana, which is what we call the data availability layer, this blob, this binary of rollup data, which Solana can't really understand, but is just kind of holding in its data logs. The nodes of our rollup will go and read that off. Essentially, once it's confirmed on the Solana layer, you just kind of read in the call data and you kind of deserialize it and you're like, hey, this is all the stuff that we saw posted on Solana. I'm going to run all this data through my own kind of virtual machine, and I'm going to recompute the same stuff. And I'm going to check with all the other kind of full nodes in the network, and we can kind of agree on certain things. So to start, yeah, I guess we'll have a few full nodes. I've already talked to some of the major like RPC or like validators on Solana, Triton and Helios and all these guys. So I think they're very happy to run infrastructure from us and help with some of the decentralization. And yeah, it is permissionless. Like anyone can go and spin up a node similar to Solana, which is great. We're going to try and distribute this stuff as widely as possible. Obviously, there is a bit of a cost to running it, so we got to figure out ways to subsidize it and get people excited to do that. Likewise, because there is going to be the ZK component that you also have to kind of do some proving and slashing on things. You will have to work with these kind of risk zero VM, run some ZK proofs. These things are not necessarily cheap if we go down the ZK route. So yeah, just thinking through some of the kind of economics there and making that feasible for kind of node operators as well.
Do node operators get paid in Sol, just like they do on mainnet, or what's the transaction token? Is there a fee
it'd probably
or something?
be more with the transaction token, but we're still kind of thinking through the specifics of this, how we kind of engineer that in there. There's also the new thing that has popped up is restaking and how that works with rollups, which has been interesting. But I'm honestly just still getting my head around some of those concepts.
Okay, so you might use your token as the transaction token.
Yeah, that's right. I mean, yeah, I'm still kind of conflicted because we want to make it gas free, at least for users. Okay. But I think it would be nice to have utility, I guess, on the Rollup for kind of node operators and infrastructure providers and be able to work that in there.
Yeah, I mean, I think that for you to incentivize people to join, there has to be an economic value, right? One of the things my thesis for alt SVM, whatever you want to call it, a Rollup or app chain or whatever, is that it really just grows the pie for builders and for validators, and those are the two most important constituents of the Solana ecosystem. And then users obviously are the other really important group, but I mean, I think the ecosystem doesn't exist without the builders and without the validators. And so the more revenue we can help validators generate, the more sustainable the economy of Solana becomes. And, there's been a lot of talk about the network and L2s just wanting to extract value and make money, which I think is totally a fair reason to build your own chain in an L2. But I think it hasn't been my thought is, and that hasn't been really discussed, is that the validators, the operators are the network. And so anything we do that makes them more money and more stable strengthens the network as a whole, as an economy. And I look at alt SVM is part of that big Venn diagram of the Solana economy. So I'm happy to hear that it's permissionless and a lot of people are going to participate, and you'll figure the economics out. You'll figure it out because you have to. Otherwise, you're not going to get, you got to align the incentives somehow. And tokens are the greatest incentive aligner. That and USDC. I mean, you could literally just have them take a piece of the transaction fees. It would be, that would hit your revenue, but it would definitely increase the decentralization of that layer of your stack. So it'd be interesting to see what you guys do.
Yeah.
So we're getting towards the top of the show here, and I always ask the same question. What have I not asked you that you wish I'd asked or that I should have asked?
Ooh, that's a good question. No, I think all the questions have definitely been good. Let me think a second. Question is, what questions would you have wanted to ask me?
Yeah, what should I have asked that I didn't ask?
Oh, something that would be interesting actually is we are trying to figure out, essentially, because we're trying to move, I guess, from just being an app chain and just being a perps exchange on a Rollup to actually supporting a more fully fledged ecosystem. And I think this maybe also dovetails nicely into some of the work that you're doing, Alex, in terms of SVM. So we're trying to see and get expressions of interest for who would be interested in building on top of our Rollup. I think it's kind of a longer term play. We don't have the full kind of nuts and bolts ready yet, but I think it'd be really cool to see use cases of apps that people would like to build. I know there's a lot on the gaming side, deep in. DeFi is definitely our specialty, but we think this kind of infrastructure that we're building can be generalized to a lot of this stuff. It's kind of a new area, so we're always looking to meet and connect with builders who are looking to explore some of these things and how we can kind of improve the tooling and the DevX as we go to mainnet and try and attract some of these teams. I think it'll be interesting. I haven't done too much DevRel myself in kind of recent years, but I think it'd be kind of cool seeing the use case that people want to build and how we can kind of, I guess, adjust things on our side to open it up to a more broader ecosystem, because we do want to make it permissionless. We do want to have basically a SVM module that people can put their own smart contracts and run things that will kind of interact with some of the native programs on the chain, that do some of the perps and lending and things like that. So yeah, I'm just very excited to see the scope of what people want to build on some of these Solana rollups.
Time will tell. It's early, but I think you're going in the right direction. I think my only suggestion would be like, as long as you open source the stack, the values in the network and in the users and the volume that you have. So if you open source the tech stack and make it easy for builders to integrate, they will.
I agree with that.
You know, so yeah, open source for the win there, I think. And then, we can definitely talk more about some other things that we're seeing, but generally speaking, I think gaming, DeFi specific things, a lot of like, you know, you brought up a lot of like the fine tuning you wish you could do on mainnet that you can't. That's like a big reason. A lot of teams aren't doing it really as much for the congestion or any of like the scalability issues, but they're just doing it for control. And they're just experimenting with different structures. And yeah, time will tell. It's very early. I mean, it's early. I'll give you like an idea of the market right now for this. Most of the people are rolling their own, right? Which is sort of classic, early stage, right? They see a problem and they try and solve it themselves. So you know there's something there, and then you've got a bunch of VC funding behind it. So I would estimate, like, I don't know how much money you guys have raised, but so I'm not even including that number. But from what I can see, just the people that are in like the SVM community chat that we started, it's maybe $250 million in venture funding so far across teams that are building like all the SVM products and services. And I'm not including like the RPC companies or like the core infrastructure. I'm talking about like actually they're like changing the validator client, or they're doing something like to abstract out of mainnet. And so that kind of like those venture dollars, they're being put to work with engineers. They're solving really hard problems that might be already solved by your tech, and they can still build their business. They don't have to they don't have to do all this hard stuff.
That's right. So the more that we can, I think, reuse some of these tools and build things that people can extend on. And I agree, open source more of this stuff, obviously, once it's audited. I think that will be great. Don't want people reinventing the wheel.
Yeah, I mean, that's the whole reason we started the chat. I had like 10 people in my Slack, and they were all saying the same problems. Like many of the stuff that you just said, they were all saying. And I was like, why are we just in silos? We should just be talking to each other and just ship open source software and then contribute to each other's stuff. So I don't know. I'm really excited to see how it takes place. Thanks so much for coming on the show.
Not at all. Appreciate it. And looking forward to actually showing all the stuff that I've talked about. We're trying to get a demo out by Breakpoint. Either it's just going to be a screen recording, or hopefully, if all goes well and I work crazy hours, we can get out like a little bit of a test net that people can play around with, you know, mint some tokens, maybe use like a basic exchange and stuff like that. I think that will really showcase that, hey, this tech is real, it's working. And then we're also targeting mainnet, hopefully Q1 next year. There's still a fair few things to build that we've kind of talked about here. But I think it's good. We're working really hard towards these kind of deadlines, want to be one of the first to market and have something to show for it. So a bunch more engineering to do. But we'd love people to kind of connect at Breakpoint or reach out on Twitter if there are things they'd like to see, or new product experiences that they want to build and things that they want to see from our Perps exchange. Like, I want to be out there building in the open and trying to service these needs.
Awesome. Really appreciate your time.
Great. Thanks a lot for having me.